Greetings, members, one and all of the Salivation Nation. Why the gold to silver ratio doesn't matter to silver stackers. Let's explore. This is a little mini series. It's a 2-part video series about the gold to silver ratio, and specifically in relation to the attitudes of silver stackers out there. Most in this community are silver stackers, and there's a good number of you that exclusively stack silver, or you stack a vast majority of your silver over gold. In other words, you have the gold to silver ratio, which has been fluctuating and has been relatively high. We're talking it crept up into the low 90s at one point. But there's many of you whose personal gold to silver ratios are probably 200 plus to 1. And there's nothing wrong with that, by the way. People have different strategies, and I've always been of the mind that there's no real wrong way to accumulate the metals, especially silver or gold. There's really no wrong way if the means to the end is you have silver and understand silver's role and how it can essentially preserve your wealth over a long period of time. Now, there are wrong ways to buy it. In other words, there's ways that you can foolishly purchase silver, but the ultimate end is that you have the silver, and that silver will still perform as a metal in ways that some people feel it should, including myself, although you may lose a lot of money accumulating it in certain ways and areas. And that's kind of what this video is about accumulating silver and how in the long run it really doesn't matter about this gold to silver ratio. I've received several comments on my videos discussing the gold to silver ratio and comparing silver to gold. And people say, well, it doesn't really matter to them because they're stacking silver and they're not really focused on gold, and that, silver is what it is and should be sort of in a world in its own. And really, it has become, that divide has sort of increased, and we see that being played out with the widening gold to silver ratio. But let's take and exclude gold from the mix. If you are just focusing on silver and you're buying it, you are stacking it for the intrinsic value of the metal. And that intrinsic value is historic value that dates back thousands of years. But the price is a reflection of that value, at least in today's age. And then over the last 10 or so years, the price of silver has been quite volatile, peaking out for a very short time in 2011 to almost $50 an ounce. And ever since then, it has been going down. And then it got too low of around, $13 and some odd cents in 2015. And has since seen wild swings up and downwards, only one time getting above $21 an ounce in 2016. And it has since been in a very frustrating manner for many silver stackers out there, as the price has not really reflected what many of us feel is silver's true value. But make no mistake, if you buy silver throughout that period, you are going to see at different points where you may have purchased silver at $31 an ounce, $35 an ounce, at $14 an ounce, at $17 an ounce, and at $20 an ounce. And when you take and you average all that together, you will get your DCA, or dollar cost average. And that is the key to wealth preservation. And that is that you average out the times that you bought the silver, and you calculate all that. And it doesn't necessarily even have to be with a spreadsheet. You can just, as a normalization, you just average out the price you paid for the silver. That money is gone. that you spend on that silver. It will never be recovered, but you have the money in the form of silver in your possession. And silver as hibernating money, it is one of those things that it will maintain that value of the melt value at the very least, otherwise known as bid price. And that is what we can calculate our wealth based on. Now, as to whether or not it will literally preserve your wealth, well, it just depends on what your dollar cost average final number is. And that is completely independent of gold and its price. Because if you're stacking silver, you have to weigh and calculate based off of what you paid for that silver, not gold. And that is totally understandable and a logical and reasonable way to assume your wealth. Your holdings in this metal through the course of the time that you've purchased your first ounce to your last ounce, not selling any of it in between, that is your true value at the time of liquidation. And I say value as opposed to price because value is what you see worth in at the point of selling. That's your own personal value. And you have to make that calculation not only on the price you paid for the silver at the time of purchase, but at the price you sell it at the time of liquidation, and calculate in the amount for inflation. In other words, the dollars that you get back from the silver that you sell, those dollars are worth a lot less than they were at the time that you bought, especially if it was 10, 20 years ago. So you have to take into that account as well as the premiums that are tied to the silver, obviously, because if you're paying $2 over spot for an ounce of silver and you're going to get $1 under spot when you go to sell it, there's a potential loss of there is a real loss of $3 real dollars, and that does not take into account being adjusted for inflation. So those are things you have to take into account and consider when purchasing silver, which is why I've always stressed in my videos that silver is a long-term hold. And I'm going to try to avoid using the word game, but people, they do put that in there. It's a long-term game. I don't think preserving wealth or saving money is a game. I think it's a practical, logical way to hold on to something of value. And silver is something of value. It's one of those metals that comes in various different forms, and you can see here, even in the terms of these particular ounces that you see before you, these are stacking. This is stacking silver, whether it be some of the lower premium poured silver bars to brand name cast or poured or struck pressed bars that you see here. These are ways that you can accumulate bullion in the form of bars. But obviously, we know there's a lot of different forms of silver, and they come with just as many different premiums, it seems, tied to them as well. But make no mistake, you hold on to these, and if you purchase this particular bar here, I have purchased for quite a low price. I think this bar here, if I'm not mistaken, was purchased right around when silver was about $4 to $5 an ounce. So we're talking. This bar was. I'm gonna probably make a lot of real dollars on this. Also, well adjusted for inflation. Whereas these particular bars, I paid for them when silver was much higher in price. In fact, I think this particular bar here I may have purchased when silver was right around $30, $35 an ounce. So when you take an average in those two different factors and the various different numbers of bars, in the end, I hope to just break even. That's really the idea, is breaking even. You can enjoy the bars, and you can enjoy the silver that you hold in your hand. I think there's something to that, the enjoyment of accumulating a precious metal, a hard asset, as it were. And obviously you can say the same thing for gold as well. But make no mistake, whenever you're purchasing, you know that in the long run, It is there to act as a savings account, as an insurance policy in times of economic instability. That's really what it's about. And so, with that being kept in mind, this is why it's a patient. It's an exercise in patience and diligence when you accumulate silver as a pure stacker, and because you're going to have times where silver does not meet the level and the value that it should in terms of keeping up with inflation. Silver will only keep up with inflation in the very long road ahead. And you're only going to secure that the longer you hold and the longer you keep buying at lower prices. So anytime you can keep your dollar cost average down and buy silver when it's low, that's all the better. The lower premiums that you pay for silver, all the better. And so that is something that's very personal with you. And that's why there's really no real wrong way to do it in that aspect. But let's say that you did the majority of your buying when the prices were higher, and you make a purchase and the price drops, that type of thing. I still think it's a lot better than spending it on other things that obviously have an incredible amount of depreciation in terms of hobbies, in terms of entertainment or other factors or riskier investment opportunities that are out there that you can really lose your shirt on. You can also do very well, but it's a very high risk venture. And I say that fully understanding that now, especially as I've learned throughout my time, not only on this channel, but also even before, seeing the price of silver move upwards and downwards. Silver is a riskier asset than gold in that regard, which means that it requires all the more due diligence and patience, checking out those higher lows, so to speak. Are we going to get back down to $14, $13 silver? At this point, I kind of doubt it, but it's not out of the realm of possibility. And so you have to keep that in mind, and you have to be realistic. And I believe that if there's something that I've been stating for quite some time on this channel, and that is the trying to be as realistic as I can about silver, about its price, about its performance. And I think if you keep that in perspective and not be tempted by all of the noise out there in terms of the different things about silver, about its supply, about its manipulation and the like, you're not going to be disappointed in the long run, because you know what it is. Silver is what it is. It sells itself. And I believe that is something that to hold on to. And so when you take that into account, you can see silver as being mutually exclusive from gold and the gold to silver ratio. We can remove it from the equation, from your personal equation, but just realize that if you stack just silver and you take into account for it is what it is in terms of its holdings, I can see, and it makes sense, that the gold to silver ratio won't matter to you as that silver stacker. So I hope this video has helped encourage you. Hold on to your silver and buy it when it's low, and buy it only when you can and when you have the ability to, and try to stay out of debt. I think that's the most important aspect of all of this. Silver is a savings, so it's a way to save as well. So there you go. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.